not 200%. It's not 300%, which were the Q's shorts that you made with Garrett. It is 2,500. And that is how many manufacturing jobs 3M announced they are cutting as the tech company prepares for lower than expected earnings for 2023. Executives for 3M believe that the buying trends they saw in December of 2022 will last for the next year as consumers spend less in preparation for the economic downturn. So, Garrett, do you agree that consumers are going to be cutting down on excessive spending this year?
My argument has remained the same, that when the Federal Reserve keeps interest rates below inflation, that is a negative interest rate. That means, in real terms, they will spend money because they know that their money is worth more today than it is in the future. What's going to likely happen, and I don't think a lot of people are thinking about this, is what happens when we actually do get to positive rates. I think at that point you've removed the incentive for consumers. Credit card debt has exploded, savings has declined, and you're starting to see weakness in the job markets. You're seeing all these layoffs. The industrial production numbers are extraordinarily bad. They're going to get worse if they follow our leading indicators here in the U.S. economy. So yes, I do anticipate that we're going to hit a wall on this. My expectation is that consumer spending is going to slow dramatically by either the end of the first quarter or mid-second quarter. And at that point, that's why people are betting that the Fed is going to pivot. Fed's not going to pivot.
Well, according to some experts out there, recession-proof products are chocolate, lipstick. Do you agree with that, Garrett?
A recession-proof product?
Hershey's?
No, to be honest with you, it used to be that recession-proof products were alcohol and tobacco. Now it's Netflix, which is like a crazy thing to think about. But keep in mind that that's what people are prioritizing. They're prioritizing stay-at-home products. The consumer defensive has not held up as much as people are thinking. What ultimately, in this economy, in an inflationary environment, what the economists are thinking about, even the White House came out and talked about this, is that, consumers, instead of buying the Cheerios, they'll buy the knockoff Cheerios. Well, that exists, pretty significantly. But keep in mind that a lot of the products, the off-label products, are created by those same companies. My father was at McCormick for 30, 40 years. They made the knockoff spices. So it's all going to end up in the hands of the same companies. It's just going to be at a lower profit margin.
All right. So what stocks are you watching for trades in the retail sector to capitalize on the downshift of earnings?
I would focus again heavily on the companies that are that have very high price multiples. So if you're looking at companies that are trading at 25 times earnings, those investors who are paying those levels are doing so because they're anticipating growth. Where's the growth going to come from? So you can do a very simple scan, look at PEs, look at forward PE. You can also look at price to sales, anything over 10. These are companies that they were justified at those prices because the expectation was they were going to continue to grow, expand, and move higher. If you're going to get defensive, my focus remains on the same stuff. That's to go all the way to the beginning of the supply chain, where food, housing, wood, all of the things that matter, that's where they start. They start at the production, the very beginning of the supply chain. And again, those are the things that we need. So pay very close attention to companies like ADM. Pay very close attention to companies in the energy space, particularly those that produce oil down in the Permian Basin, natural gas. Look at companies like Boise Cascade, which is BCC. I know that it's hard to hold your nose right now and buy anything related to housing, but this stock is extraordinarily cheap. Warren Buffett believes so as well. Buy, hold, and wait. It's going to be a little shaky. You just go to the other side, 2024, 2025, for the recovery on some of these cheaper stocks.
Buy, hold, and literally hold your nose, because we're going to be seeing some better conclusions for those stocks, I could say. Hey, Kenny, what about 3M? That one took a dive 5% yesterday. You seen any VWAP reversals? Are you?
What are you smiling at?
I was laughing at the Beyonce of trading.
I don't know. Why are you guys talking about Billy Beer? I got a Billy Beer can downstairs. It was like a collector's item. 3M. You know what? I don't look at the industrials too often, but you know, you had a late day close. I mean, a late day sell off at the end. So I don't know. Nothing going on at 3M today, but I got to tell you, there's just a lot of selling out there right now. And Microsoft, again, my friends, got rejected at the VWAP again. So you know, I'm still mildly bullish. We'll see what happens. But right now, I'm just waiting for that little capitulation in Microsoft. I think there's going to be some buyers showing up.